Welcome students, Tom Harmer here, your accounting professor, and this will be a demonstration of how to prepare a statement of cash flow from comparative balance sheets, an income statement, and additional information. This will be done in the indirect method. I will also be illustrating how to make this thing a little bit more understandable by using the screen capture utility. Also, some call it Snagit. I have one called Print Screen. So there we go. We'll start off and I'll illustrate that as we move through here. Okay, so let's start this guy.
Presented here are the financial statements for the Harrison Company, comparative balance sheets for 2011, 2010, and the income statement for 2011.
So here I'm going to capture this screen. So in my case, I have a print screen button that I press, and then I just come up and I'll capture this thing all the way down through net income, hit my enter key, alt tab over to my Word document, and paste it right over here. Okay, let's see, am I in the Word document? I'm not yet. There's my Word document. Okay, so I've just pasted it there. Actually, I did it earlier. You can see I can paste it again, but I don't need it twice, so I'll delete that. And we'll get the lower portion of the page when we get there. This way we can have all the data he's talking about and look at it while he's going through the problem. Okay, let's continue.
We have additional data, and we need to
pause again so I can capture this. So I'm going to go to hit my print screen button, capture this lower portion here of additional data. Enter, alt tab over to my Word, paste. Okay, make it a little bit larger here. It's a great little utility. Okay, so there we have the whole problem that we're exercising. Alt tab, so we can pause and come back to that anytime during this presentation. Plus we can use the back forward here to move around to get it clear. Okay, so let's continue with his presentation.
to prepare a statement of cash flows using the indirect method and compute free cash flow. The first step is to review the comparative balance sheets and determine the amount of the increase or decrease year to year in the different accounts. The most significant account that we're going to be analyzing is the cash account. We have a $30,000 increase that we need to explain away by the statement of cash flows. In the statement of cash flows, starting with the cash flows from operating activities section, we start with net income, and we look at the income statement and we find that we have net income of $42,000. Then we look at adjustments to reconcile net income to net cash provided by operating activities. In additional data number 3, we see that depreciation expense is $14,500.
Okay, that's where was depreciation expense. Let's see, we had here depreciation expense, cost of goods sold, operating expenses. Okay, maybe we had it down here. Dividends, equipment sold, equipment originally book value $8,500 at the time of sale. All depreciation expense was $14,500. So depreciation expense we didn't find in the income statement, we found it in the additional data section there, that $14,500. That's where his number came from.
We see that accounts payable has an increase of $14,000. This is a source of cash, and it's included in the section of operating activities.
So we are converting accrual basis net income to a cash basis. So we're pulling out everything that doesn't involve cash. The depreciation expense is just an adjusting entry, does not involve cash. An increase in accounts payable means that we perhaps showed purchases or we showed expenses, but they didn't involve cash because they were just on account. So that's why we added it back.
A decrease in income taxes payable of $1,000 is a use of cash. So we have minus 1,000.
So a decrease in a payable represents a use of cash because it's taking cash to pay down a payable, and that's for any kind of payable.
We see that we have an increase in inventory of $7,000. So this is a use of cash. And we have an increase in accounts receivable of $14,000. This is also a use of cash. Next, we run a total on all the adjustments. We have total of $6,500. So the net cash provided by operating activities is $48,500. From additional data number 2, during the year equipment was sold for $8,500 cash. The equipment cost $18,000 originally and had a book value of $8,500 at the time of the sale. So the cash inflow from the sale of equipment, $8,500, is included in the vesting activities section.
So we flip over here to the, okay, during the year the equipment was sold for $8,500 cash. Okay, that was a, okay, and this equipment cost $18,000, had a book value of time. Okay, so you could calculate the gain or loss on the sale. Okay, sales and purchases on account. Okay, dividends. So there we go, and we come up here to property, plant, and equipment. We had a change in value there. Okay, $18,000.
Next, we look at the cash flows from financing activities. We look at common stock. There's an increase in common stock of $4,000. So there's a cash inflow from the issuance of common stock in the amount of $4,000. We look at bonds payable. There's a reduction of $6,000. This is a result of the redemption of bonds payable, which is an outflow of cash in the amount of $6,000. We also see that in additional data number 1, dividends declared and paid were $25,000. This is an outflow of cash. So we run a total on the financing activities section. So we have an outflow of cash of $27,000 in the financing activities section. So we determine the total change to cash. We add the net cash provided by operating activities of $48,500. $8,500 cash flows from investing activities, and an outflow of $27,000 in financing activities. So there's a net increase of cash of $30,000. We have cash at the beginning of period of $20,000. So the cash at the end of the period is $50,000. That ties into the balance sheet ending balance in cash. Free cash flow is computed by subtracting expenditures on plant assets and dividends paid from net cash provided by operating activities. In this case, free cash flow is $23,500.
Okay, so we lost that. I just like to back
Presented
up
here are the financial statements for the Harrison.
Okay, so in any case, I was going to flip back here to how the increase in cash. We had an increase in cash of $30,000, and so that statement of cash flows, which I don't have on my screen anymore, we showed that with an ending balance of $50,000. So the very bottom of that statement of cash flows reconciles to the from the beginning cash to the ending cash. There you go. There's a presentation of doing the statement of cash flows. Thank you.